Hey there guys, you're here with Bo and welcome to my channel Cryptocurrency Australia. Now in this video we are going to talk about functional tokens versus tokenized securities. Now this is quite a complex topic and it's an evolving one as well, as regulators around the world are trying to define how different cryptocurrencies fit into different categories in terms of whether they are these functional tokens or whether they're classed as securities. Now there's many layers to this as well, so we're just going to look at a couple that you should be aware of or that will add value to you if you're considering investing into a particular cryptocurrency, whether that be straight off an exchange or in an ICO, because these there's some particularly important things you should be aware of that are going to become more and more critical as time goes on. So first off, let's just start. What are functional tokens and what are tokenized securities? Now, if we come over here, we can see this table. Now, all we're going to do really is we're going to look at class 1 and we're going to look at class 4. So first of all, what is a functional token? So a functional token or a functional cryptocurrency enables access to a platform or a service, a product, or a set of programmatic API services. So basically the token is used in the platform ecosystem. Now we're going to go into why this is really important from an investment perspective in just a little bit. So the second definition we want to look at is tokenized security. Now a tokenized security promises or implies ownership or dividend rights, including rights to vote, influence, and a company's direction or payments, and has been registered with regulatory bodies. Now there's also the unverified tokenized security. So a tokenized security that appears to not have been cleared through regulatory bodies. Now that's a really important one. Okay, so we have a functional token, and we have a tokenized security. These two main categories at the moment that are not always clear with the flood of ICOs and the hundreds of new cryptocurrencies coming onto the market every day. So we're going to go into why these are really important in just a bit, but let's just try and break down the functional token a little bit more before we get into that. So over here on Block Geeks, it's a fantastic article here, this graph from William Munchie on the different aspects to a functional token that is used within a platform itself. So here we have this triangle. Now we have a token, has a role, has a purpose, and has a feature. Now a token may fit into each one of these, or it might have two of these aspects, or it might have all three of these aspects. The more utility a token has, the more inherent value it should have as the platform grows over time. So this is a good way at a high level to look at some of the features different tokens or cryptocurrencies can actually have. Now these can be hard to disseminate sometimes because a lot of ICOs, quite frankly, aren't clear about what function their token actually serves. So when you read through the white papers of many ICOs, it's quite clear many of them appear to be just a tokenized security or just a token that has no real function within the platform itself. So why is that important from an investment perspective? Well, just coming over here looking at CoinMarketCap, which is absolutely bleeding at the moment, as you can see. You have all these different cryptocurrencies. Now there's a high probability a lot of you own one or some of these different tokens. Just ask yourself, what value does that token have within its own system, within its own business model? What's actually driving up the value of that token other than pure market speculation? Speculation being literally what the market is willing to value it at, what you're willing to buy a certain token at. Do you know what value your token has? Do you know if it's a functional token? Is it a token used in an ecosystem? See, the important thing about this is because there's so many ICOs flooding the market at the moment, over time, I believe the market's going to start to mature and regulations are going to start to crack down. But as an investor, if we just look at it from an investment perspective, you want to be looking at tokens that have value proposition, that have a functional token that over time, that token should, if the startup company is successful and companies start using their platforms and then use that token to access certain services, that should organically drive up demand for that particular cryptocurrency. So that's driving up value outside of pure market speculation. Now you'll find a lot of the tokens I've talked about before and have said that that are my personal favorites are tokens that are functional tokens, that I've taken the risk to purchase that certain token or to invest in that certain token, because over time, as the platform grows, as the ecosystem grows, there should be organic demand for that token because it's used within that platform itself. Tokens that are purely speculative in nature and are just being driven up by what the market is willing to value it at, in my opinion, are the more risky tokens to look at. Now, again, as I spoke about, this sometimes can be hard to disseminate out of just the white papers themselves. It's sometimes not always clear. So we've kind of defined how a functional token and how a tokenized security can be seen from an investment perspective. But what about a legal perspective? How is that kind of broken down? Well, the SEC, which is the Securities and Exchange Commission in the United States, is over time continually looking into whether tokens are securities or not. They're looking into it more and more, and they're starting to publish quite a few articles and bulletins about this, because without going into a lot of detail, when a token is classed as a security, it has to fall under certain regulatory approvals and governance processes, and there's a huge process a platform has to take if their token is classified as a security. Now, what you'll find is a lot of ICOs will exclude the United States and Singapore. That's because they haven't defined, those platforms have not defined whether their tokens are a security or not, and therefore haven't gone through the registration process with the SEC or with the equivalent body in Singapore, and they're, instead of risking it and advertising in the United States and then the SEC classifying that token as a security, they just exclude those countries, and that's why they do that. Now, if we look at this article here, this article is just another one of these bulletins that keeps coming out from the SEC about ICOs, and how the SEC is starting to look at ICOs with a finer and finer detail, and they're actually starting to take action. Now, let's have a look at an example of that. So, talking before about tokenized securities and whether something is a tokenized security or not, how it's not very clear, but how these companies either need to identify whether it's a security or not, or exclude the United States and Singapore when they're offering their ICO. Now, some key points to consider when determining whether to participate in an ICO. Some really good points here. So it says here that depending on the facts and circumstances, the offering may involve the offer and sale of securities. If that is the case, the offer and sale of virtual coins or tokens must itself be registered with the SEC or be performed pursuant to an exemption from registration. Before investing in an ICO, ask whether the virtual tokens or coins are securities and whether the person selling them are registered with the SEC. A few things to keep in mind about registration. If an offering is registered, you can find information such as a registration statement or S1 form. If a promoter states that an offering is exempt from registration and you are not an accredited investor, you should be very careful. Most exemptions have net worth or income requirements. Although ICOs are sometimes described as crowdfunding contracts, it is possible that they are not being offered and sold in compliance with the requirements of regulation crowdfunding or with the federal securities laws generally. So interesting stuff. Let's have a look at an example of the SEC coming down on a recent ICO. Now here's one called Munchie. Now I don't want to call out Munchie based on this. I just want to use this as an example. Now here it says that Munchie Incorporated has elected to close its current offering to ensure it is in compliance with applicable regulations. Munchie will be refunding sale participants. Munchie appreciates the support it has received from the community and will be announcing a new offering in the near future. So if we come back over here to the SEC, we can see here this press release, company halts ICO after SEC raises registration concerns. So basically, the SEC looked into Munchie during its ICO and identified that the tokens it was listing or that it was giving out in exchange for Ethereum and Bitcoin during that ICO sale were actually classed as a security. And because they hadn't registered with the SEC and gone through those governance procedures that companies need to if their tokens are securities, they had to shut down. They had to close the ICO and refund participants. So this is becoming more and more prevalent, and the SEC and other government bodies around the world will start to be looking into these more and more and more. So it's really interesting, and it's also important to consider this not only for ICOs but for existing companies as well, because existing companies could still be looked into based on this. So here's a good article on something called the Howey test. Passing the Howey test, how to regulate blockchain tokens. Now this goes into applying something called the Howey test, which was basically back in 1946 the result of a court case. They developed this thing called the Howey test to determine whether certain shares were classed as securities or not. Now people are trying to use that same test and apply that to cryptocurrencies and tokens. It's not always clear, it's not always perfect, because tokens are, and the applicability of tokens is evolving over time because the market is so new. But we're starting to see more and more guidelines and more more information to help different ICO companies and investors basically define whether these tokens are securities or not. And here's one. So introducing the blockchain token securities law framework by Ruben Brahmanathan, blockchain lawyer. So this is really good. I won't go into it in detail because there's a lot of legalese and it does get quite complicated, but there's also a free spreadsheet that you can access via this link where different ICO companies can go through this checklist, and at the end it basically calculates whether or not their token may be classed as a security or not. And if it is classed as a security, as we discussed earlier, it would have to go down that path of becoming registered, especially if they intend on advertising in the United States. So that's pretty much it, guys. That was just a high-level overview of functional tokens and tokenized securities, and why it's really important to gain a further understanding of these if you're considering investing into not only ICOs but existing cryptocurrencies as well. And again, always try and look for those tokens that are functional tokens that are used within the platform, and if that platform becomes successful, and also remembering that 95, if not higher, % of the cryptocurrencies out there have startup companies behind them. There is lots of risk investing into cryptocurrencies at the moment because they're startup companies. They're not Microsofts, they're not Google, they're startup companies. So they're trying hard to disrupt existing industries with this new amazing technology. That's what creates the really good opportunities for investors at the moment, but also comes with a lot of inherent risks due to the fact that there are so many startup companies. So I hope this video taught you something. I certainly gained knowledge myself looking into it. As always, there will be links down to all these articles down in the description below. If you want to learn more about cryptocurrencies, or you're new to cryptocurrencies and you want to understand some of the fundamentals, including the risks involved, some of the ways to go about buying, selling and storing cryptocurrencies, and trying to get a good understanding on how cryptocurrencies work, my course is currently $29. It was $15 for the last sort of 5 weeks, I think. It's now gone up to $29. It's still 81% off the original price. You need to make sure you go through the link below. There'll be a coupon code. It is a great course, currently 4.7 out of 5 ratings, which is just phenomenal. Again, if you're new to cryptocurrencies, this can be great to bring you up to speed on some of the fundamentals. So, again, hope you enjoyed the video, guys. Thanks for watching. I'm Bo, and I'll see you in the next one. Cheers.